Have we already achieved, past tense, the soft landing? Have we just put in the cyclical bottom in the plastics industry data? Hello, thank you for joining me for this edition of our Numbers Matter short series. And the recent rally to all-time highs in the stock market, I think, is prompting a lot of analysts to start to think that maybe we're already into the next recovery phase. And if I'm honest, the data indicate that might be true. So let's look at it a little more closely. And I have charted the index for industrial production of plastics products in the U.S. It's one of my favorite indicators. You've seen it here many times if you've watched this series at all. And so far this year, that data is trending upward. 3 or 4 consecutive increases, monthly increases, and a year-to-date in plastics production that's up about 1%. And this is corroborated by the data from, say, the chemical products industry, and they're up 2% year-to-date and trending higher. And increasing optimism amongst manufacturers in that sector as well. So this certainly looks like it could be a cyclical bottom. This is what cyclical bottoms look like. You put in a low and then you start to trend higher. But if you look carefully at the data just in the past 10 years, you will see there were times when the data did continue to trend higher after putting in a cyclical bottom for an extended period of time. And there are a couple of times, like in 2019 and 2021, when the data was trending higher and then just took a precipitous drop. So a few months of higher trending data doesn't guarantee a cyclical recovery or a sustained recovery, but this is what it would look like if we are getting one. So what do I think is the most probable direction of the data from here? Is this a head fake and it's going to have a precipitous drop? I think that's a low probability. Is this the start of a strong recovery? And now the data will trend upward at an accelerating pace as it has done in other cycles. I think that's a low probability. I think the most likely outcome from here is several more months, at least a quarter, possibly 2, and maybe even more of consolidation at or near these levels. In other words, I don't think this uptrend is reliable. I've graphed the production levels for the total manufacturing sector, and you can see that clearly has not started any kind of an uptrend. And without the whole manufacturing sector participating, I don't think the plastics industry is capable of pulling that manufacturing sector data upwards and dragging it up with it. I think it's more likely that the opposite will happen, that the plastics industry data will revert back down to the same trend as the overall manufacturing sector. We've got durable goods moderately higher on the year. We've got non-durable goods down on the year. Plastics tends to be more of a non-durable good, but it's represented in both categories. But nothing spectacular yet. And the reason I think that it's going to continue to consolidate at these levels is that interest rates aren't really going down. They're staying where they are. Now, I know there are some people out there, maybe they have agendas, maybe they have incentives to say what they're saying, political agendas, corporate agendas, that the soft landing is in. Well, I think they're playing fast and loose with the definition of soft landing. And soft landing, to be honest, isn't really an officially recognized economic phrase. It's just a metaphor that was made up. And it seems convenient. But like any metaphor that's new, it can be manipulated or spun or something like that. But I will give you my definition of what a soft landing will look like when we get there. Number 1, the soft landing will not occur until the Fed takes their foot off the metaphorical brake. Their interest rate policy, monetary policy, is still restrictive. They are still trying to curtail demand. They have not relieved any of the pressure that comes from higher interest rates. Until they stop trying to slow things down, we will not have landed. By my definition, how can you land if you're still going or decelerating or attempting to decelerate? So that's first and foremost going to impact it. Now there's fiscal policy, which is Congress voting to spend money, and that's been very stimulative. It's countered the Fed policy, if you will, in the past year. The Congress has spent a lot of money. The problem with that is I think they're overspent. Even in an election year, there's not a lot of money left to spend. In fact, the federal budget deficit and the federal debt is, in percentage terms, the highest it's ever been during a period of full employment in history. This is a time when the government should be accumulating or lowering deficits and debt, and instead fiscal policy was very accommodative in the past few years. I don't think that's going to continue. And so I think that we need a period of consolidation still. The rates of inflation are not down to the Fed target. You can look at the last month and interpret that however you want, but however you spin it, however you look at it, the commodities prices were higher, and the commodities index and indices are actually trending higher in the past few days and weeks. That puts upward pressure on things, especially for materials for manufacturing. So I don't think that will persist, but it's pushing prices higher. The consumer prices are still going higher. They're not trending quite as upwardly as they were in the first quarter, so that's good news. It looks like they might start to trend downward toward the Fed target based on April data, but that's 1 month of good news. So in other words, the Fed has no reason to change their policy at all. There's no reason to expect that the Fed is going to dramatically lower or even slightly lower interest rates. And if I'm of the opinion, if they were to lower interest rates in the near term, it would be because the news is getting progressively worse, that the economy looks like it's deteriorating, which would not be good news. That would be bad news. So I see interest rates staying where they are for at least another 3 months, perhaps longer. I don't see any real upward movement in the plastics or manufacturing output data until the interest rates come down. And so I don't think we have achieved a soft landing. We will know it's a soft landing when the probabilities of the overall economic data for the next period of time, month, quarter, however you want to measure it, whatever term, have a higher probability of going up than they do of coming down. And the overall trend in the GDP data for the past 3 quarters has been a gradual deceleration in line with the Fed's intentions, but certainly not yet landed. I think there is a greater probability the next data point on the economy will be slower still, not faster. We have not landed. We're not going to land until we're accelerating. So thank you. Stay tuned. I watch this stuff very closely and will do my best to keep you apprised as well. Thanks again.